Hey guys, what's up and welcome back to this YouTube channel. It's your guy Igor here. Today's video is dedicated to biggest Canada real estate mistakes to avoid the mistakes that I've seen other people do, being into real estate myself here in Calgary with eXp Realty. Guys, I'm a realtor. Anyways, here's the biggest investor mistakes that I've noticed that cost people tens of thousands or $50,000, can be hundreds of thousands of dollars. Depends on the severity of the mistake and recklessness of those people who invest into real estate. Well, the real estate mistake that I wanted to mention is, well, I would say it's closer to, I'm talking about the person that I know. I'm talking about a person who purchased a house without a realtor. I know a person who made a mistake maybe between, guys, don't go for the exact number, it depends on the market conditions, but I would say between $60,000 to $80,000 mistake that they made buying that property that, well, now they're stuck with. And I want to say what are the mistakes and how to avoid those mistakes if you are planning to be a real estate investor in the future, or you are a beginner real estate investor right now. So you are deciding, let's say, to invest into real estate, and you're thinking, what can be the mistakes that could be made? Well, guys, here's the first mistake in real estate investing, and that is not knowing the market. For example, you might be like that person that I'm talking about from Ontario. You might be from there, and you're pretty familiar with the Ontario market, but you have no idea how Calgary real estate market is. So, or Edmonton real estate market, or within the Calgary, there are different markets within the city itself, depending on the quadrant, depending on the community, depending on the type of the property that you're looking for. So it's a huge market, and there are some overconfident Ontario investors, like the person I'm mentioning right now, that come to Calgary thinking they know everything. They buy real estate thinking they purchased it at a good price, and well, according to the Ontario standards, that's a bargain. That's a free, cheap property. According to Calgary standards, they overpaid without even knowing that. So biggest mistake number one is investing into an unfamiliar market without having anyone on that market who is representing you, who knows that market. For example, like myself, a realtor who's been working on this market for the past over a year now, and I helped so many people purchase their property. I already know this market pretty well, but there are some people who do not know, and they're buying their first investment, and they decide to go there by themselves without getting any idea, and just go with the gut feeling. And well, there is a 50 chance that they would mess up. So number one is not knowing the market and going into there. Guys, I am licensed realtor in Alberta, and I do business in Calgary, Airdrie, Chestermere, guys. You know, like Cochrane, for example, and Strathmore, and you know, even Okotoks, let's say. But I'm not going to go to Edmonton, even though I'm licensed to do business in Edmonton, because I would send you to another realtor that I know there who is very good with that market, because that's a completely different market, too far away from me. And even being an experienced realtor as myself, I wouldn't go there by myself without knowing anyone and start making claims on something, because I'm not from that market. So if you are from Ontario and you're very familiar with the Ontario market, I recommend staying in Ontario or hiring someone in a different market, for example, if you are not familiar with that market, so that you have somebody who knows that market. Now let me cross the road a little bit here, guys. I don't want to go towards the cars because it's going to get too loud on the microphone. So that's the first mistake. Second mistake is, guys, not having enough experience in investing. And that's not a mistake, everyone gets that experience. It's important not to make the first mistake, is not to know the market. So if you are going into investing, it would be a very good idea to get someone who at least works with investors, who knows how things are done and can guide you through the process. You know, at least someone who is into real estate. I do not recommend just jumping into investment if you don't know a thing about investment. So like watch YouTube videos, do your research, learn from others, and best thing is get someone or partner with someone within that market who knows investing pretty well and someone who you can trust. Third mistake I would say is not having enough funds. So you might be like, there are people who would buy a property into real estate, they would invest, but they didn't plan on, it's expensive venture to invest and it's a risky one sometimes, and most of the investors renovate the properties. Okay, so they would buy a property, right? They would keep it, they would renovate it, they would rent it out, they would create that revenue, cash flow from that property, increase the value of the property like that, put the tenants inside it so that it creates cash flow, right? They would take that property, then they would take a HELOC on that property or refinance it under a lesser interest rate. So this is how investors usually do, guys. I'm giving you like a very expensive tip that investors don't want you to know. That's how they do it. They buy a property that they, let's say, cannot get. They go with a private lender with a very high interest rate where they have to pay. By the way, guys, if you need a lender, if you need money for a mortgage, and doesn't matter what kind of credit history you have, I'll leave a contact in the description of this video of Realtor. It's my wife, she's with DLC Clear Trust Mortgages, and she can guide you in terms of mortgages on how to get mortgages, even if you're not exactly qualified for an A lender, because there are B lenders, there are private lenders, and there are so many products out there. So she's the expert in this, not me. So feel free to contact in the description of this video. But what I'm saying is, this is how they do it. They go with the private lender, they put in some money into the property, a year down the road they refinance the property under a lower interest rate, a positive cash flow, then they get a HELOC from that property and they reinvest the HELOC, and they keep on flipping the properties, buying new properties, sometimes selling, sometimes keeping them as an equity gain and using that equity to get another property in the future. And basically they spend the money like that, making a ton of cash flow. It's also risky, so it's important that you have extra savings for those renovations needed for that property, because sometimes borrowing the money can be very expensive, especially if you're going to private lenders. Interest rates are already so high, it's even more. That's one of the reasons, guys, I want to tell you, the interest rates and the investors, that's one of the reasons, guys, I'm going to India for vacation very soon. For over 2 months I'm going to be there. I'm going to have people watching after my property while I'm away. But I'm going to go to India for vacation, and I'll be back by the end of January, because from all the investors I spoke to, a lot of them are taking a pause. Some of them are still buying because they just cannot stop buying properties, but a lot of them are getting a pause and they're going to be waiting until February. So I decided to also take a vacation until beginning of February, because I have to follow with the trend of the market. So that's going to be my vacation until I'm back closer to the February, because that's when the investors are going to, according to a lot of people that I know, are planning to get back on the market. That's the plan of some clients that I have, and I'm just accustoming my plans as well. But anyways, in short, what I'm trying to say, you have to have enough money to get those properties to the standard so that you can make money from it. Now also, next part about it is time in the market, buying on their own time. Unfortunately, a lot of people purchased properties on the peak when the market was blowing up, and they are stuck with that assets now. So if you were one of those investors who purchased it at their own time, if you look at the market right now, and investors are, I'm not there to teach investors how to make money, but a lot of them already figured it out, that you can still make a huge positive cash flow from rent. So they all kept their properties on rent, guys. They're making a ton of money. Those people who are purchased their properties, let's say in April this year, like March, February, April, March, and like one of those months when they are more exploding, multiple offers and situations like that. Now, good part about those guys, investors, they are on a different market. So they're not exactly on the same market where a general consumer is. They're on the market for multifamily homes. So things work slightly different there, but still people manage to overpay at that time. However, what investors do, and this is how they think, is they look at the amount of a down payment and how much money they put towards the property and the interest that they get and a positive cash flow from rent that they get from it. So in short, they haven't lost money if they haven't sold that property yet. So they would keep it on rent, and they would still get return on investment based on their money that they invested into that property. And for a lot of them, it still makes sense because the rents are so high here in Calgary. So in that way, it's good to also try to time the market. But in terms of investors, this is kind of a thing that a lot of people do differently. They think differently from everybody else. When you're buying a home as a general consumer, you're thinking, okay, I'm buying $500,000 home. And $500,000 home, and this is how much money it would gain or lose. Investors think differently. They're like, okay, I'm investing $100,000. How much money am I going to get back on my $100,000? Let's say I'm investing into a 20% of a property, and they're not looking at $500,000. They look at the 100,000 and what they're getting on return on that $100,000 that they invested, let's say, or 200,000, let's say. So that's the difference between thinking of a general first-time home buyer versus the investor. Investors, they think a level higher. They think on how much money they personally have invested and what they're going to get after they sell the property, or over the years, the return on investment and how much they should keep it, how much equity it would help them build over the years, and what in the future they can get from it, or how they can utilize that equity from that property in the future to invest into something better. But that's a separate topic for a separate video. Now, here's another mistake that some investors make, but most of those investors are beginners. That is not having a realtor. I've seen some investors who are like, well, you know what? If I go to a realtor who is selling the property, right, and I don't bring my own realtor, I can negotiate on that realtor's commission. So the person who is selling the property can get to double-side the deal. So that person who is selling the property can get commission paid 2 times. So I could come to that person, let's say, and he's going to make 2%, then with that kind of property, let's say he's going to be making 4%, so I can negotiate, let's say, 1% out of his commission, so that he gets, instead of 2%, the realtor gets more money, and I get an extra discount from the property like that, right? Well, that is the dumbest decision that unfortunately a lot of investors make, because that realtor is still representing that side of the sale, okay? And unless you know the market, unless you've been investing into Calgary market for a lot of time and you do not need a realtor because you've been in the game for past 20 years working with different realtors, but if it's your first investment into this market and you do that, chances are that seller is going to get more money from you. The realtor who is selling the property is going to get more money from it, from double-siding the deal. And even though you have an illusion of, for example, saving on 1% of that realtor's commission, potentially not him having double commission, but him having the commission 3/4 out of the double commission that the person would have got, and it's just an illusion. You're just cheating yourself. So my recommendation is always work with an experienced realtor on that market who can look at comparable properties in that area and give you a fair value, guys. So this is the best way to do the business. It's, in real estate business, everyone gets to make money. So as soon as you try and cheat somebody, let's say, out of making any money, and this way you think you are gaining something, a lot of people, majority of times, are losing a lot of money. So I would say bring your own realtor, bring your own person, and when you're investing into real estate, come, and when you're buying that property with your own realtor. Don't go on one person who is double-siding the deal. Chances are that person who is selling the property has had long-term relationships with that person who is selling the property. Most likely is also an investor and brings return business. So the realtor who is representing that person who is selling the property might not want to screw up his relationship with the person that he's selling that property and he's going to be selling multiple other properties for them in the future and get them a better deal than for you. Just telling you obvious things right now. Well, guys, and I was going to mention one more thing, and there's people staring at me from another side of the street, and it just came out of my mind. Well, guys, finally, yeah, do your research when you're investing into real estate. Get your realtor that you can trust, who you think is an honest one, and try not to be too cheap on the money, on the investment, on the renovations, and you know, it's important to get yourself a good deal, but in business, in real estate, it's important to also consider everyone who is in the same business. So it's important to build very good long-term relationships with the person you're dealing with, especially, you know, be it an investor, be it a realtor, be it another person, be it the contractor, you know, and things like that, to make sure that you make the most money of it. Everyone gets to make something out of it and you get the best deal. As soon as one party feels cheated, that's when the problem starts for everyone. It's just giving you a thing about investment. Now, I know some people who are watching this channel are pretty experienced, others think they are experienced but not very experienced in it. All I'm saying is, guys, if you're going to a different market, number one, be patient. Number two, have some extra cash. Number three, get a realtor to help you out on that market. That would be my biggest suggestions. Once again, guys, I'm Igor, Realtor. This is XP here in Calgary, Alberta. And we'll see you in the next video. I hope this video helps, and it's like a bootcamp course for investors. I want to tell you that a lot of investors work with multiple different realtors. They have different representation agreements, for property specific representation agreements as well. And you know, it's a really interesting thing to become an investor, to be a home flipper and things like that, but make sure you have as much contacts as possible. The contractors, renovators, handyman, realtors, you know, other investors. The more contacts you have, the more successful of investor you're going to be. And that's my solution. This is my video that I want to share with you guys. If you have any more questions and details, always feel free to contact me. If you're searching for a property in Calgary or anywhere in Canada, I'll refer you to someone. See you guys soon. Bye for now.